What's up, Fanbase Finance family? Glad you're enjoying the June 12th edition of Fanbase Finance, and I'm gonna bring you the business and finance news for the week. Number one, market shake on economic and rate news. So Fed rate cuts bets are starting to rise. So after softer PPI and elevated jobless claims, futures now signal 2 rate cuts likely to start in September. Markets expect a more aggressive easing and weakening labor data going forward. So we'll see how that looks. The dollar dips a safe haven curve. So driven by Middle East tensions and tariff unease, the dollar fell to its lowest level so far this year, while oil and gold saw upside momentum. Number two, inflation and producer prices cooled down. So May CPI was up. That's consumer, the consumer index. That's just up 0.1%, keeping annual inflation at 2.4%. Remember, the Fed was trying to get this down to 2%. Right now it's at 2.4. So retailers like Walmart have started adjusting for tariffs, while airlines and hotels continue to cut fares. Number three, labor market cools while still holding. So 139,000 jobs were added in May. Unemployment rate, it remains steady at 4.2%. Weekly jobless claims remain elevated, evidence of a softening, but not yet a collapse in labor. So, that's one of the areas that I look at along with credit card debt. Number four, Trump and Musk feud and the Tesla drama. So it was kind of short-lived on the rat beef between Elon Musk and President Donald Trump. So Musk's criticism of Trump's big, beautiful bill kicked off a public feud last week, which triggered a 14% drop in Tesla stock. Of course, naturally, the investors jump up, and so guess who apologizes? Elon Musk. So he expressed regret, and now, magically, the stock has risen back up a little bit. There's still obviously a good bit of uncertainty in the market. Analysts say fallout won't derail Tesla's robo-taxi rollout on June 22nd in Austin, though political uncertainty remains sort of a wild card. Number five, Conference Board forecasts slow 2025 growth. So LEI signals slower growth. The US GDP likely to grow just 1.6% in 2025, which is down from what they predicted coming into the year at 2.8%. Consumer expectations have soared since January, but a full recession signal hasn't been triggered quite yet. And then last, number six, the US and China trade truce and market buoyancy. So 90-day tariff sort of truce, with the truce sort of in play still. US indexes like the S&P 500 are started to get back to record levels, and it's up 2.3% from even just a high in February. So that's sort of the news. I'll give a quick sort of takeaway. So is there easier money on the way? So if rate cuts were to come in to play, that would sort of ease the cost on debt. Prices are holding steady, but really watch retail and travel sectors for tariff inflation this summer. Jobs are holding on, but sort of barely. There's still growth, but it's not really roaring. Politics, of course, hit the market. Watch the Trump and Musk deal, but stocks are sort of swinging, and they'll sort of prove what happens between that relationship. Growth is slowing. We're not at a collapse yet, but we're also not booming. So we're sort of flat right now as a country. And then the trade war is sort of easing. So it may be, but markets are still cautiously optimistic. So that's the news for the week. Let's get back to the conversation. I know it's a good one. Fanbase Finance.